Hey there, it's Dennis Wiebe here again. Just wanted to do a final recap video on the numbers for our property that we were dealing with in West Broadway. So we've kind of gone through the entire journey then of what was the reasoning for buying the building and what did the numbers look like at the beginning. We went through a lot of the videos of transitioning each of the individual units, and now, this is now the proof in the pudding. We have done a refinance on the building, so now let's look at the numbers and see, did it work? Did it make sense? So without further ado, let's get into some of the numbers and see how that works out. So I'm going to start out with sort of a recap of the original. So we had purchased the building. So the buy was at $267,000. I think it was 266 and change. We'll call it 267. And I believe my original estimate was we were going to have a 78% ROI. That's cash on cash return. So let's see how well we did based on those. Because our original was that we were going to spend, I believe, somewhere in the range, and I know it was somewhat fluid because things change as you go, but we were looking at somewhere in the range of about $90,000 being spent on the reno. So we did spend more than that, and we had projected that we were going to have very little money left in it. We are estimating that we would have $20,000 in cash left into the deal. So that's, and it would generate a 78% ROI for us, cash on cash. So how did we actually make out? So we did buy it at 267. Our actual reno was 110,000. You go like, whoa, Dennis, you missed your numbers by a big amount. Well, the reality is, as you open up walls on a 100-year-old building, you do find things that you weren't accounting for. In this case, we had to replace the main stack for plumbing because it was cast and it had rusted through. So if you don't address that, it's just going to become a bigger issue down the line. So we did do that. There were some things that we decided to do to make the building a little bit nicer. Some of the renovations were maybe a little bit more extravagant than we had originally planned. However, it's worked out fairly well. So we had projected the 420 on the refi. Our value came back at 450,000. So even though we spent 20 more on the reno than original expected, we also got 30 more on the valuation. So we were able to do a few things that I believe drove that. We had a couple of good benefits with the market. The market has certainly been really good, but we also had a really strong revenue stream to support that. So let's go through sort of what we started with and now what we ended up with. So if we're looking at just the revenue, so we had 4 suites. It was a 4-plex. So unit 1 was rented at $1,000. Now we currently have it rented for $1,200. Unit 2 was rented at $1,150. Currently is rented for $1,225. Unit 3 was rented at $850. We currently have it rented at $925. And unit 4 was rented at $680, is now rented for $850. So that's the rents, but there's more. It's like the infomercial, but there's more. We added laundry, and we also added parking. Both of these generating a little bit of extra money. Laundry, maybe not a huge financial benefit, but you also get the benefit of it's a little easier to rent units because now you've got laundry facilities in the building. Parking, So we ended up renting out 4 parking spots at $60 per month. So 4 times 60 gets us $240. So that gives us the total revenue stream of 4460, I believe, or 4480. I can't remember exactly. I did the calculations, but it's 4480 a month. So pretty significant increase on the revenue stream, which drove the price of 450. So it just changed things dramatically to be able to get a stronger revenue stream, which then drove a stronger value. So some of the additional renos, like obviously changing a plumbing stack doesn't change the value of the building. However, doing some of the things that we showed in the videos earlier did drive extra value on the rents. Things like tiled backsplashes, tiled showers, new flooring, and all that sort of stuff. And we went through those in the videos. So the long and short of it is we have a better revenue stream, which drives just a better value overall. So how did the actual refi go? Well, we did it with one of the big 5 banks. So we have an 80% loan to value. So the bank was giving us a mortgage of $360,000. Okay, our original buy was $267. We paid out the mortgage, we paid out the renovations, and we ended up, at the end of the day, we only have, from that, paying out everything that was outstanding, we ended up with only $17,000 left in the deal. Okay, so this is our cash in the deal. We're at $17,000 now. So that's after paying all the contractors, doing everything along the way, the closing costs, all the bits and pieces. $17,000 cash left in the deal. So if we now look at, okay, now what's our return on investment? We originally had targeted the 78%. This was our original number. Okay, so we have 17,000. Now in mortgage pay down, every year we get, I'm gonna round it, but it's 10,800. That's mortgage pay down. Okay, so that's money that we're not getting in cash, but our revenue stream is paying down our mortgage so that we gain equity in our building every month that we make a mortgage payment. The other thing that we're actually getting is cash flow. So I showed you the revenue stream, and we are actually getting cash flow per month of $1,230 a month, which translated out to 14,000, I'm just going to round it, 14,500 a year. So our total is actually 25,300. That's our change in financial position with the cash flow and our mortgage pay down every year. Now, we only have $17,000 left in the deal. So we're going to take that 25,000 and divide it by our 17,000 to see what our ROI is. So our current ROI is much better than what we originally projected, and we are actually at 150% in terms of our ROI. This is why we do the BRRRR strategy. The market was better than anticipated. We were able to get a little more rent than anticipated, which drove our appraisal value, which was better than anticipated. Even though we overspent on our renovations, we got a little bit better mortgage rate. Everything got a little bit better than we originally anticipated. But even if it didn't, Even if it didn't, I would have been really happy with a 78% ROI. So all the money that we had invested in this, we've now gotten it back, and we are actually on to our next project, which I probably will go through some videos on that to show that it's a little bit different one, a little bit different neighborhood, but we can go through that as well to see, show you guys how this works. And it's not just a one-time, one-off, this is a miracle deal. No, there's others. And as you find them, each one you have to solve what the problem is and be able to make it into a profitable building, which will then drive the value, which allows you to refinance. So we can do another video on how the refinance went, because there was a few hoops to jump through on that. As well, I do want to talk in a future video about the transition, how that transition went from old tenants to new tenants and how we handled that. But if anybody else has any ideas, I'd be happy to hear from you. So that's sort of the recap on the numbers. If you have any questions, feel free, you can give me a call, 204-228-6455, or shoot me a text, or I'd be happy to chat with you in person. Thanks so much, guys. Take care.